Talk to us about the consumer behavior that you're seeing. Are we still buying big bulk pantry items? Have you seen changes as of late?
So overall, our average order value is still up way, way, way above our norm, even over 2020. So I feel like all of us probably have a little bit of scar tissue when it comes to what happened in 2020. So we're still seeing folks pantry load a bit and stock up more than they otherwise would have back in 2018, back in 2019.
The pantry loading is so interesting. I think about doing it myself, honestly. Are there things that people are buying more now to prepare for the next year?
Yeah, so right now, I wouldn't say there's any standout trends. So it's not like the big toilet paper stampede of 2020. But overall, we are starting to see folks load up a little bit more. Again, those AOVs are rather high. We're lucky that as we went public or about 2 weeks ago, we had already kind of stocked up even here in our inventory. So we're still plenty stocked and ready for consumers. But so far, I don't see a huge run on merchandise as we did, again, in the middle of 2020.
I'm interested in, you've got the inventory, but what about the labor and the element of that? Are you very much a company that's dependent on, well, robotics, on the technology part of it? Because we're seeing worldwide everyone now wanting to work from home to a certain extent, worried about coming into work. Are you being hit from the Omicron variant at all?
Not so far. I think one of the things of Box and how we treat our employees, it creates a really great culture where the average tenure of an hourly fulfillment center employee for us is between 2 to 3 years, which is really, really, really abnormal in retail. But outside of that, I think where you do see kind of the effect is the last mile delivery folks really, seeing labor shortages on their end and thereby increasing costs all across the entire industry. So from our personal perspective, we haven't been hit as hard as some of our peers out there. But even with last mile, you're starting to see some of those effects. I think overall, what you basically see is the trend of 2020 and 2021 is that, we just weren't going places as much. And so instead of spending money on experiences and services, we were spending more money on goods, actual tangible goods that are being shipped to your home now. And so all of that has definitely increased the pressure on the supply chain and increased the pressure on the labor force around the country.
Talk to us more about that inventory that you mentioned. There's been a lot of conversations that people are, and even businesses, maybe you, double ordering to make sure they don't run out, but it's just pulling forward future growth. Are you, in a way or in an effect, sort of double ordering and then there's going to be a big slowdown next quarter?
We haven't seen that, or we're not planning for that. I think for us and our business in particular, I can't speak too much about other businesses, but from our perspective, we have not only a B2C business, but also a B2B business as well. So in that way, we're hedged on both sides. So if Omicron is not as serious as we all believe it may be, and as we potentially return to offices, say, come the new year and come as the weather gets warmer in the new year, then of course our B2B business begins to pick up. So from that perspective, we are hedged on both sides.
Especially given that you're newly public, how do you invest in that next leg of growth? What does it even mean to you?
Yeah, it means a lot to us. So not only from the organic side, increased marketing, increased staff, increasing engineering. And remember, we also sell the software and the technology that powers our core business. So really powering and building out a sales team on the SaaS side of the house. That's really important for us as well. But also remember that public currency that we now have, where we will remain active looking for potential kind of accretive acquisitions for us as a company. We just closed one literally the day that we went public. And so that's also a benefit of now having a public company currency out there.
Interesting. So, of course, via that special purpose acquisition company going public, now able to make acquisitions, continuing to invest. What about the companies that are looking to use your software? I mean, we talk about this transition of retail, the fact that everyone suddenly had to get themselves to an e-commerce place they needed to be. Has that all been done to a certain extent? Has the heavy lift been done, or is that investment going to continue?
I think that investment will continue, especially in where we're investing. So our pipeline is heavily in Southeast Asia, heavily in developing kind of economies around the world. And so there's heavy and big investment into e-commerce, and I think we're primed for big growth there. E-commerce, and you guys have covered it on your show before, it's no longer not a nice to have anymore, it's a need to have. Not only you don't need to kind of see that on Bloomberg to believe that, but even us personally, when we go around and shop now, e-commerce is just, having a good e-commerce experience has become so critical from the voice in the face of the shopper.